far as the retail market in precious metals, it's gone from a very slow trickle over the last several months to fire hose type of volume. There's an awakening, and maybe it has something to do with all the metal that's been imported into the COMEX over the last 9 months, levels that we've never seen before. Anyone has ever seen before. And that goes hand in hand with what we've been talking about for a long time with the central bank buying. And then you start to see things like the CIO of Morgan Stanley saying, well, maybe a 60-40 stock to bond allocation isn't really good. Maybe we should go 60-20-20, 60% stock, 20 bond, 20 gold. You have Jeffries, one of the head traders at Jeffries, saying now 6,600 is what they're expecting. You have Michael Hartnett from Bank of America said, well, no, it should be 25, 25, 25, 25, 25% stock, 25% bond, 25% short-term treasury, 25% gold. You have Goldman Sachs saying if the Federal Reserve gets one whiff of the Federal Reserve losing independence, Goldman Sachs says this, but what's Stephen Mirren, who filled that vacated spot, but the author of the Mar-a-Lago Accord and advisor to Trump? What independence? So there's a lot of, I think, signals pointing to that the very, very big money, the institutional money, is moving in this direction. Jeffrey Gundlach, the bond king, comes out and says 25% gold is not too much of an allocation. Now, my whole career, Kai, 5% was acquiesced by the financial advisors to appease their clients who were into gold. 25%, when the biggest money in the world, from Tether to the commercial banks, to the central banks, to the bond king, saying, look, we made our mark in traditional assets, but you might want to weigh up your gold allocation. Something's different, honest to God. And then you add on all the imports into COMEX, which is 5 feet of snow in Death Valley in July in terms of an anomaly. Every month, billion over billion over billion over billion in gold and silver coming into COMEX. Something is really very different. For the very first time in 35 years, I mean that sincerely. Something's very different.
Absolutely. But the question is now, everybody's changing their forecasts. Analysts are upgrading their forecasts as well. Goldman Sachs even said like $5,000 is possible if only 1% of the treasury holdings in the U.S. are being shifted towards gold. I think that's even an understatement to a degree because nobody knows where that money will push gold in that scenario. But was there a tipping point, or are we back to little by little and then all at once?
I think that there has been, to your point, there has been a tipping point. What tipped it, I'm not sure. Maybe it was the little by little that's just starting to tip the, they have those things on the cruise ships. They fill up with water and then it finally tips over and it pours down on on the slide for all the kids. That's what it's like. It's like something is tipping. I don't know. I think it's just a realization that the Federal Reserve is going to move to cut rates. Cut rates in an environment, a rising inflationary environment where the CPI has stayed above their target 2% for over 53 straight months, where they've revised, you're going to talk about the unemployment numbers, they've revised almost 500,000 jobs year to date as is, let alone all the revisions that we saw before that. And so I think that it's a weak market. It's the realization that we have chosen inflation over austerity and getting our balance sheet in order. And maybe the world is finally waking up to that holding treasuries. When Jeffrey Gundlach, the bond king, says, let's just, all of these guys, whether it be Morgan Stanley, Goldman Sachs, Jeffries, or Jeffrey Gundlach, saying, we're going to take money off the bond table and reallocate it to gold. That's when people should stand up and take note. This is how these people made their mark, and now they're backing away from it. I don't know. I think maybe that is the tipping point, is that they're speaking to institutional level people. They're not speaking to mom and pa. They're speaking to their institutional clients. And, Michael Hartnett's letter is not cheap, and the analyst for B of A, and to go to 25, 25, 25, 25, who's ever heard of that until now?
No, you're absolutely right. The question is like, are you doing your little Schadenfreude dance now? Is like the "I told you so" dance when nobody's watching, of course, Andy. But are you doing that? Like, how vindicated do you feel after all these years? Like we've spoken for years now, and it's finally like the trend was always sort of visible for us in the space, but now other people are waking up. Do you feel sort of vindicated when it comes to that?
I don't feel vindicated. I feel relieved. And for maybe you'll understand this. You will more than most. It's a heavy responsibility to do what we do, and you can get out here and say what you believe, but you're putting your name and your reputation on the line in front of the world, and people follow what you're saying. I feel relieved that the amount of time that I put in, and just like I'm sure you do, 3, 4, 5 hours a day, 7 days a week, researching, studying, mostly reading, not watching podcasts, scouring the globe for information. I'm happy to know that it's helped some people and that it's coming true. And quite honestly, it's more concerning and frightening than anything. Yes, there is reason to be optimistic. It's the Shawshank Redemption. It's crawling Andy Dufresne crawling through the tube of crap for 2 miles to get to the other side. And there is reason to be optimistic in much of what I see and much of what Trump is trying to do to reshore manufacturing. But if you're not paying attention to what is happening and how they're going to get there, in particular with the Genius Act and my belief of pegging gold to the back end of the bond market, as Judy Shelton has talked about, if you're not paying attention to what that looks like in the mechanics, saving in dollars, you're destined to go broke. This is the first time in my career where I truly do believe that if you're not a contrarian, you'll end up being a victim. So yeah, I guess you could say, relieved more than I am feeling vindicated. I always in my soul knew that I was right. At least I felt I was.
It feels good, to be quite honest. Coming out of a 14-year bear market in the mining stocks as well, it feels good to finally be right. I hope I'm not just a broken clock who's right twice a week or twice a day, right?
Dude, you know what? You can be right based upon economics and logic and be wrong for a long time, because people that have been using suppression to hold down these markets, these are very powerful folks who have now gone the other way, and they're like, no, I think we're going to go long and stand for delivery. There are different things happening, different dynamics, I believe, that will make you look right in spades before it's all said and done.
Let's break down, like, who's actually buying gold right now. Like, when you look at it, like, before it was the central banks. I think we've talked about that ad nausea. But who's really pushing gold now to 3,900, 3,915, I think, on the futures for December right now as we speak here, Andy. So who's the real buyer right now?
Well, I mean, there's no question that it's still the continued main characters, China and the BRICS nations. But what's vastly different, is you have the most well-informed traders here in the West, in the United States, that are standing for delivery to the tune of billions and billions and billions and billions every month. And the question that you ask is one that should really be thought about. Who the hell is buying all of this? Every month we're seeing billions and billions and billions every week come into the COMEX. And guys like Vince Lancy, who are no dummies, and he's a smart dude, one of the smartest in the industry, and he says, look, 85% of the gold that's being bought by the central banks is not being reported to the IMF. They're bringing it in ways like China going in and buying doré and concentrate, as Sean Kuhn will tell you from Dolly Varden, from all of the miners in Latin America and in Mexico, pulling gold and silver out of the ground before you even call it that, because it's in concentrate and doré form, shipping it back and refining it themselves. Well, that doesn't trigger IMF reporting. It's under 999 fine. Or buying it from other locations around the globe through maybe proxy banks or sovereign wealth funds that don't trigger it, and using artisanal and local miners, and bringing it in not through the central bank channels, so it's not reported. All I'm saying is that the biggest money in the world has been doing this for a long time and getting more creative in the way they're doing it. But what is different now is that who the hell is bringing it into this country? If I had to guess, now again, could be a guess, I would say it's the Treasury Department under the guise of the Exchange Stabilization Fund, where it can be quiet. Don't tell anyone, it's for national security. And now I think you should interview Tom Luongo as well. He has a very interesting take, and that is that Trump understands or believes that it is the European aristocrats who were behind any perception of election interference and a color revolution in this country during the previous administration. And he's out to get the Bank of England and those banks who are massively short in London. Now, all the gold that's been coming back, could it be that It's been covering the short positions of the banks here in the States who, when they short on COMEX, they go long in London. They bring it back. They call it tariffs. It's not tariffs. It's never been about tariffs. It's been about reshoring. So maybe if you want to walk that fine line of conspiracy and reality, and this is coming more from Tom than it is from me, but I think it's a very intriguing idea, is that all that gold coming back, maybe it's being used to cover the short positions of the banks in the States with the idea that it's going to go to the Treasury in terms of their gold acquisition for whatever their plans are with gold revaluation or pegging it to the bond market, as I believe, and to cover their balance sheet. And we're this close away to some sort of a systemic moment in London where the inventories, in particular of platinum and silver, are down to less than 1 day's worth of trading. And if these continued delivery requests happen, you're talking an existential threat for some of the biggest banks in Europe, and Trump is out to get them, is what Tom is saying, out to get the Bank of England and out to get these aristocrats that are the bankers in Europe by having some form of a delivery default in London that would very quickly trigger a systemic chain reaction that could bring down some of the biggest banks in Europe, as the banks in the United States have quietly covered. Now, could that happen? Don't know. All I'm telling you is the amount of gold coming into the COMEX every single week is unlike anything anyone has ever seen, and we are now net importers of gold for the first time, really, ever, other than World War II, when everyone sent us their gold as part of the World Reserve Standard. And, you know, since then, maybe 1 or 2 months here and there, but every other, the trend has been net exporters for the United States as far as gold is concerned. My whole career, which is going on 36 years.